Let's have a look at copper through the CPER ETF. I think there is something brewing that also rhymes with actually a global equity market that's been beaten down and looks to potentially recover. There's a strong correlation between the price of copper, and we're going to use this CPER ETF here, which I'm longer term very structurally bullish because of the demand for copper from all the electric things that we're building out here globally. This is the weekly chart of the CPER ETF. You can see we're kind of basing. We've held previous highs. This is just technically quickly showing you the futures contract so you can see this a bit better. And I'm showing you the ETF because I know a lot of people are liking to use ETFs for that. But in the longer term, you can kind of see that we're holding in pretty well here. Again, hasn't seen anything amazing happening as of late, but it does look like we're trying to potentially start grinding higher here. Now, where this becomes really interesting is when we start overlaying copper versus the Chinese equity market. Now, the Chinese economy certainly has problems, but they're also stimulating the hell out of the economy. There's seemingly a new stimulating the headline almost every day. So what we're doing here, we're taking the HSI. It's not a perfect example to Chinese equities, but there's a decent correlation, and you can see that index is in orange, and then copper or CPER, the ETF, in blue. And if we kind of peel this back, you can see there's quite a strong correlation. So if we look at this, and there's a reason for that, because of course China is the manufacturing hub of the world still. And if we were to then do this kind of an analysis, you can see it's the same kind of point. So if China were to pick up, I have a hard time imagining copper wouldn't start following suit. So to bring this back to CPER, again, that's the copper ETF on the daily chart, I take increasing comfort in this potential move here breaking out, and would probably target somewhere around, the 26 area as the next sort of target if this gets moving. This is also critical as it relates to risk on assets in general. So if you think about this in terms of what that means for a global growth, risk on metrics. So the more we were to see this, the more difficult it would be for the bears to make a case that we have a major change in the equity markets outside of your typical 5-10-ish% sort of pullback in the US equity market. We have a very special discussion coming up this week on how we use our technology to find trends as they change, for example, here in CPER. So it does all the heavy lifting for us. We'll showcase you that technology. You can sign up for that discussion down below or on the next screen.